Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday the Australian dollar bulls weren't hanging around after a weak release of the fourth quarter Australian GDP figures came in well below expected. The market fell to a 3-month low yesterday after the figures were released at 70.20, down from 70.91 high. According to the Australian Bureau of Statistics, the ABS, the Australian economy grew by 0.2% in December quarter, the slowest growth in 18 months, while annual GDP growth has slowed from 2.7% to 2.3%. This was well below the consensus and short of the RBA's 3% growth target for 2019. The odds of a rate cut this year have just risen, but in the speech before the GDP release, Governor Phil Lowe remained upbeat that a strong labour market would continue to support wage growth and help the economy through a weak patch. With a level of 70.60 crushed now, does expose a region of 69.40.60, with the immediate support seen at 70.15. Resistance on the day seen at 70.45.65. Weakness is still showing in the euro, but a little pause as it approaches the level of 112.50. Overnight, the dollar index also showed a slight pause after the release of the US non-farm private employment rose less than expected. US private employees added 183,000 jobs in February, below the forecast of 190,000, a report by payrolls processor ADP showed. Still, tomorrow we do have the US non-farm payrolls report, which is to show a forecast of 185,000 new jobs and an unemployment rate from 4% to 3.9%. But the eyes will be all on the wage, average wage, hourly earnings, when the market will be looking to a forecast of 0.3. The dollar index also posted two highs. Previous was 96.93 and last night was 96.92. As it currently sits around 96.75, the market is still enduring a further bullish case. After the last 6 to 7 days of bullishness to the US dollar, you can see the weakness has continued here. I do expect to see a short round of demand from 112.50, but it would be viewed as profit taking. Resistance on the day seen at 113.55. Dollar yen coasting for at least 5 days now underneath the 112 handle, and from a technical point it is breaking down slowly. I do expect to see weakness towards 111.60. Now beneath there would reignite the downside to 110.80 to 110.20. I see firm resistance around 112.40. Well, with the Brexit coming closer and closer to the divorce date, which is on the 29th of March, is that we've got a slight bullish candle come through here. Keep an eye on this because we can still see a reignite of bulls to take the challenge back to 133.5. From a technical point, we have broken down, but I'm not fully convinced as of yet that the bear case is slowly merging. But the recent break of the last few days could still see a move to 129.40. Now, a break above 131.95 will negate the recent bear call and instead see further tests to the upside. Gold slipped but rebounded off 82 and briefly looked at the highs around 1,290 before dropping back again. My concerns though is that the gold is not bouncing, and therefore we could see a break of 82 down towards 1270 as a target. But we are extremely oversold, so this might be just the last sell-off before the market turns around. Reason behind that is there is concerns with North Korea that there is evidence of some activity in their missile sites. So from what the papers were saying this morning, so do keep a close watch in case safe haven demand returns. Wrapping up with oil is the fact that it's still going sideways and a little bit weaker, but not as much as the market may hope. As long as we maintain above 54.95 to 55.25, then I do expect to see further rounds to the upside and look towards $58 a barrel. Do note beneath 54.95 would give concern because there's no support until $51 a barrel. But at this stage, I feel the bearish threat is still limited, and therefore we could still look for a further challenge to the upside. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day that's ahead.